we are looking at in terms of whether crude prices are concerned, they have dropped sharply after the announcement of the ceasefire between Israel and Iran. Now, do remember that US President Donald Trump had posted that announcement earlier today on his Truth Social account. But the question really is this a good news for oil marketing companies? Somit joins in with more details on this.
Yes, if you look at the Brent crude prices, which is the Asian benchmark for crude, it has fallen from its peak of around $81 that we had seen recently a couple of days back to around $69 per barrel. So clearly, the war premium that was there of around $10 per barrel has been wiped off. Now, which companies or which oil companies stand to benefit out of this? Well, specifically the oil marketing companies, that is IOCL, BPCL and HPCL stand to benefit out of this, given the fact that the fall in oil prices will boost the marketing margins of those oil marketing companies. Now, the integrated margins before, when the crude was at around $81 per barrel level, was at around 1.5 rupees per litre, which means that they were earning around 1.5 rupees per litre on sale of every litre of retail fuel, that is petrol and diesel. Now, given the fact that crude prices have come down to around $70 per barrel, these integrated margins will shot up to around 9 rupees per litre. So a clear boost or a clear gain in the marketing margin that we can see in the next few days, and every 0.5 rupees per litre gain in the marketing margin boost Indian Oil Corporation, BPCL and HPCL's EBITDA by anywhere around 7 to 11%. However, on the negative side, it's the oil explorers that stand to lose out here. That is the ONGC, Oil India, Vedanta and HOEC. For them, it's clear negative, given the fact that oil is the key product for them, and every fall in oil prices lowers the realization for them going forward. And generally, every $5 per barrel drop in the oil prices lowers ONGC and Oil India's EPS by around 7 to 12%. Also, lower crude oil prices is beneficial for India as a country, given the fact that we import nearly 90% of our crude requirement, and inflation, if you look at fuel, has a direct weightage of around 4.4% in the CPI, while when it comes to WPI, the weightage is higher at around 7.95%. And generally, every 10% reduction in the crude oil prices lowers the WPI and CPI by around 80 to 40 basis points. And when it comes to current account deficit number, the oil accounts for nearly 26.5% of the total imports and 61% of the commodity imports. And as per analysts, a 10% decrease in the crude oil prices narrows the current account deficit by around 30 basis points. So clear win-win, not only coming in for the country, but also for the oil marketing companies.
That's the overall breakdown that we are seeing in terms of the companies as well as the economic stand view as well. But Vineet, coming to you now, we are seeing this shift in terms of where the narrative is concerned. Just a few days ago, we were talking about it's a positive for oil explorers, but now with the fall in the price of crude oil, now we are seeing a shift back to these oil marketing companies. I want to understand your outlook, whether you continue to favor OMCs or oil explorers, your view.
So I think the war cycle is coming to an end, and there is no immediate conflict that is going on apart from the Ukraine-Russian conflict, and that is also at the fag end of its culmination. So I believe that the pricing environment for OMCs is going to be very strong because low volatility means good profits, and I think OMCs will do very well from current levels. BPCL is our top pick.